I did want to ask both of you guys who have your boots on the ground, uh, what are you guys seeing right now in terms of seller interest in selling? Has anything changed in their excitement with the interest rate announcement 8 days ago?
Darren, what are you seeing? I'll go second.
The price expectations have gone up. I'll tell you that much. But yeah, actually, I did buy 4 properties in the past maybe week and a half, which is 4 is about an average month, but that's a week and a half. So there was a bit of a boost. Yeah, I think people are just realizing it's time to kind of move on with life and move on to the next chapter in their life and sell their home. So there's been a bit of a boost, but these sometimes they don't last forever, right? That it only might last a couple of weeks, and then we'll see what the future holds after that.
For me, I'm starting to see a little bit more. If you guys have followed anything like that we've talked about, I know at some of our speaking engagements, I've talked about this. We'll see the market and all that pick up. We've seen it over the last 18 months where a lot of the houses we bought, it is a lot more based on need to sell for the sellers and a lot less about want. As a lot of you guys know, when the market's hot and chugging along, we see a lot more people that want to sell because they either want to buy a different house, they want to move to a different place. Right now, everybody's so afraid to get out of or has been so afraid to get out of their mortgage because they've had a great mortgage rate if they signed up, prior to about 18 months ago. So I'm starting to hear a trickling in of a lot more people saying, well, I just want to sell because I want to go here or I want to move there, which is very, very encouraging for us, right? And I just think you're seeing a lot more people that, have had enough of just sitting in their home, right? And we live in a world of, our wants far outweigh our needs now. So people are wanting stuff, right? They're wanting a new home, which is always exciting for any of us in this line of work. So.
Yeah.
Awesome.
I mean, and I would say it's very early too, because typically we find sellers lag buyers in market changes, in perception of market changes.
Yeah.
Buyers or investors are typically have more of an eye on what's happening in the market and keep more of a pulse on it. Whereas sellers sometimes lag a little bit more. So when the market's going up a lot, sellers' price expectations aren't always as high. And yet buyers or investors sometimes see like, oh, it has been going up a lot, and they get more excited about it. So it's very early to see how it would change, but it's good to see that there's already some positive movement. Because I do feel a lot of potential sellers, if they're able to, have been holding on. Like Corey was saying, it was a need for people selling that they were calling us. And now we might see more of those like, okay, well, maybe now is a good time to sell, or maybe now I'm able to. People will be interested again. So I will give it a shot kind of thing. So I think we're going to see more of that. So it's good that way.
Awesome. All right, ladies and gentlemen, without further ado, we'll get rocking and rolling here. So tonight's itinerary is Luke is going to speak. He's going to talk about a number of different things around interest rates, some trends, what he thinks what he thinks is gonna happen over the next bit of time. I'm going to jump on, talk to you guys about where the sweet spot is, what gets us really excited when it comes to flipping and moving houses. And then Darren is going to go on and talk about something that's near and dear to his heart, which is buying properties virtually and remotely, never stepping foot in them and owning a number of properties. And he's going to give you guys tips on how you can go about doing that. Question and answers. If you guys have any questions, we will get to them at the very end. We want to kind of keep it rolling smoothly. So we will try at the end to get to as many questions as possible. Our goal, we kind of have a hard stop around 90 minutes. I think 90 minutes is enough for everybody. I realize everybody is very busy in their lives, and we appreciate you guys jumping on to have a conversation with us and listen to what we have to talk about. And then somebody asked if there is going to be a recording. We normally have a recording for everybody after this, so you can sit. If there's anything you missed, or you had to go say goodnight to your kids or something, or go get something to eat and you missed a part of it and you wanted to hear it, there will be a recording. So anyways, so a couple things for those of you jumping on. I know I saw some names on there of people we know that we've worked with, and there's a number of people that We don't know, so it's excellent. If you don't know what we do, we are Canada's largest wholesaler. I know there's a few other people that kicked it around, but it's not even close. You know, when the market's chugging along, we do in the neighborhood of 300 to 500 deals a year. Right now, we're averaging somewhere around 200. We primarily, as a company, wholesale is our first option, is our first choice. That is how our company is set up. However, over the last 18 months, we have, I would say it's probably about 60-40 flips versus assignments. The reason is, you know, I make this joke all the time that, you know, 2 years ago in the market, you know, kind of quickly took a downturn. There was a lot of people that got hurt, a little bit like a relationship you got broken up with. It really hurt, and people are getting back into the investment game again. However, over the last kind of 6 to 12 months, it's been a little bit of, I'll get back into the dating world, but I'm only dating a 10 out of 10. Is kind of what we're seeing. However, I know we are seeing a lot when talking to our disposition team. If you ever buy a property from us, that's Katarina and Tammy. They would be the ones that you contact when we send a property out. And speaking with them, they've been very excited over the past couple of months because they're having a lot of great conversations with people that we used to do a lot of work with 2 years ago. And, you know, a lot of people saying, hey, you know, I've got some money, I'm ready to rock and roll again. So very, very excited to see that. So again, guys, if you have any questions, we will try to put them down in the Q&A portion, and we'll try to get to as many as we can. And without further ado, Luke, I will hand it off to you.
Okay, great. Perfect. So I'm going to talk a little bit about interest rates and the economy, and where things I think are going to be going, but mainly how I look at it. So I'm not an economist. I was a lawyer. I have an MBA, and I'm very much not an economist, nor do I play one on TV. So I just want to explain to you guys a little bit about what I'm seeing and how I view it. I'm not saying that this is, you know, the crystal ball or the end all be all, just how I view it. So if I hope everyone here knows, at the last Bank of Canada meeting, they dropped interest rates by 0.25%. First time they've done it in a long time, because they've been climbing and climbing and climbing. Anyone else who has variable mortgages on their rentals, like I had quite a few of mine were variable, they can be painful. So I've actually started getting some emails and letters from some of the banks I deal with saying, oh, your interest rate, your payment's now gone down, it's going to be this amount. I'm like, whew, that's great. Nice to get a little bit of a break. Not a big one yet, but that's part of what I'm going to talk about. I think we're going to see a little more of that. The other thing, I'm sure by now many of you know this, the fixed rates are tied to the 5-year Government of Canada bonds. And in last October, it hit a peak of the 5-year Government of Canada bond rate hit a peak of, it was around 4.4%, the 5-year bond rate. And then in December, January, it went down quite a bit to like under 3.2. And then just 2 weeks ago, it was back up to 3.8. And with this interest rate cut, it's dropped, and as of today was at 3.3. So huge variations we're seeing. That's quite different. We're even 2 weeks ago going from we've dropped 0.5% on the 5-year bond rate in 2 weeks. And that's just related to a 0.25%, or a 0.25% change in the Bank of Canada rate. So basically the bond rate is based on what people are expecting to happen in the future. So I just put a chart here. These are the next meetings: July 24th, September 4th, October 31st, and I don't know, and in December. So I'm not saying that there's going to be cuts at any of these or at the next one, but these are kind of the dates to pay attention to on when we're going to see the next changes. And I think it is worth paying attention to. If you can go to the next slide. So one of the things I look at, I mean, again, this is what I like to look at. So you can take a look if you want. There was a big drop in the month over month in the annual Canada's core inflation rate. So the interesting about core inflation rate versus the inflation rate, you usually see in the news, is that they take a lot out. And one of the big things they take out, well, two of the big things they take out are gas prices, which have gone up a lot. So taking that out makes a difference. And they take out housing costs, or some of the housing costs. So your mortgage payments that have gone up a ton, or the interest payments, they take that out of the core inflation numbers. So that's gone up for everyone. And so even if inflation is going down in a lot of ways, but people's housing costs have gone up so much because of interest rates, you're going to see in regular inflation still stay maybe higher, but because they're taking, like, in comparison, the core inflation is going to be dropping a lot faster. So next slide. So this is the inflation rate in Canada. You can see the numbers. It was 2.7 for April. On the bottom of the chart, 1 second, sorry. The next announcement for inflation numbers it's June 25th. That's when they're going to announce May numbers. And so keeping an eye on this is important, because if this keeps going down, this is one of the main reasons. This and the core inflation are one of the main reasons that you would expect to see the Bank of Canada want to drop interest rates. They have a target for inflation, and we're getting in line with that target. So if it keeps dropping, they're going to have to start dropping the interest rates faster to stimulate the economy and keep inflation from dropping too much. Next slide. This is something I pay attention to, is the month-over-month change. And the last chart we were looking at was the year-over-year change. So it was 2.7% year-over-year. And that 2.7% is what happens if you add up all of these numbers here. You add up May of 2023 until April of 2024. There's some negatives mixed in there. If you add that all up, it equals 2.7. The reason this matters to me, the reason I like looking at this, is comparing last year's numbers to what might be happening in the economy now. So if you look at May of 2023, the month-over-month change was 0.4% in 1 month. What will happen on June 25th, that when they announced the month-over-month change, well, basically the next year-over-year change for May numbers, is May of 2023 is going to drop off, and it's going to get replaced by May of 2024. So if May of 2024 number is also 0.4, then nothing is going to change in the year-over-year inflation. If May of 2024 is 0.6, then annual inflation is going to go from 2.7 to 2.9. But if it's 0.1, then annual inflation is going to go from 2.7 to 2.4. So you can kind of see when there's high months and low months, and if this year's comes in lower, we're going to see a bigger change. And looking at this makes me kind of optimistic for the July meeting, that we may see another interest rate drop by then. Obviously, there's other factors. The next slide is one of those factors. So this is looking at the unemployment rate. Keeps going up. This is one of the other big factors the Bank of Canada is looking at. And so you can see, last May was 5.4% annual, and now we're at 6.2%. Keeps going up. So what we're seeing is the inflation's going down, or not climbing as fast, and unemployment is going up. Basically, the Bank of Canada was trying to slow down the economy, and it worked. And the question is whether they overshot it, held it too long, or didn't hold it long enough before their first drop, and what's going to happen over the next few months. Next slide. So same as what I was talking about, the month-over-month change with inflation. And yes, I know this is super interesting, but this is, and by that I mean not at all. Normally, but I think this is important to look at. So this is the change in full-time employment. So similar to me, the month-over-month inflation change as compared to the year-over-year, you're looking at what the month was last year that's going to get dropped off at the next announcement. So if you look at June of 2023, it was a very, very good month for, it's actually the highest month on the chart for positive employment change. Well, right now, my feeling and what I'm seeing everywhere is that it's not going that well. employment. There's actually a lot of people looking for employment. There's high unemployment, and that's not trending in a positive direction. So I'm not expecting to see June of 2024 as high as June of 2023. And if you're following that, that means the next month's chart, you're going to lose June of 2024, the highest number on the chart of 2023, the highest number on the chart. You're going to add June of 2024, which I will expect to be a lower number. I don't want to say hopefully, because I want people to have jobs too. But I do expect that then next month, our unemployment rate is going to be even higher, which is a bad sign of the economy, which gives the Bank of Canada another reason to stimulate the economy by dropping interest rates further. So I'm not necessarily, my crystal ball isn't saying that the next change is going to be that we're definitely going to have a drop in interest rates at the next meeting, but I do see it trending in that direction, and I think we are going to see changes. The nice thing is, U.S. inflation is coming down as well, and so there's talks there. They are right now, they're pricing in at least one drop in 2024 of interest rates in the U.S. as well. And there's a lot of other factors. So these are just two factors that I look at: the unemployment rate and inflation. Those are two of the main factors I look at, and where I believe they're trending. So right now, what I'm trying to say is, I actually think we're trending in the right direction for prices to continue, for interest rates to continue dropping. And what I expect that to do is to slowly stimulate the economy. So we've had, unfortunately, this year, the market's been kind of slow. There's been, like Toronto, for example, I was just looking at a chart about it. Prices are down. The benchmark home for May 2024 was down 3.5% year over year. Small drop from May of 2023 to May of 2024. What I'm seeing in pretty much every market we're in is a little bit higher inventory on the market than normal. So it takes a little bit longer to sell a home on the market. That doesn't mean things aren't selling. We absolutely are selling homes. It's just, it's not selling as quickly as it was before. But now that interest rates are dropping, and with that, if we continue seeing it trending in the direction, we're going to see the 5-year bond prices falling, and the 5-year fixed mortgage rate is essentially, it's not directly tied to it, but it is tied to it. They work together. They're correlated. They just don't happen as quickly. So we're not, an economist was saying that, or I think it was Ron Butler, was saying that when rates are going up, the big banks, their rates climb on an elevator, and when rates are falling, their rates go down on the stairs. So banks like to see rates in the 5-year bond rates holding a little longer at the lower price before they lower their fixed rates. So it just means it takes a few weeks longer to start seeing the lower prices. And we're starting to see it now from the recent drop, and we'll continue seeing it as long as, the 5-year bond rate stays lower. So we're going to, what I mean is, a few price drops on the variable can end up making a large price drop or interest rate drop on the fixed, as long as, the market and investors continue believing that it's going to continue trending in that direction. You're going to continue seeing interest rates dropping, fixed rates and variable. And the fixed rates are going to drop faster. So that's kind of the positive thing. That's kind of where I see it trending. And with that, a lot of people have been waiting on the sidelines because of the cost of owning homes, or the cost of mortgage payments. Either they can't afford it or they don't want to. They can't qualify because of how high the mortgage payments are, or they don't want to spend that money now. I think we're going to start seeing some of those people waiting on the sidelines. They want to buy homes. We have a lot of people who come to Canada, and they do, and Canadians, we want to buy homes. And some people have been waiting on the sidelines for affordability reasons, things like that. I think we're going to start seeing a lot of those people coming back in, and inventory numbers aren't going to stay as high as they were. So that's where I see things going. I wanted to give a couple examples on the next slide. So this is just one example of a house that we recently sold 17 days ago. I took the screenshot today. I think it was on the market for less than a week. As you can see, this one listed at $325, sold at $395. So as I was saying, there's a little bit more inventory on the market. Some things sell a little slower than before, but there's the right type of product that will still sell quickly. The next slides show the kind of what we did to it. And the funny thing is it wasn't a crazy reno. Yeah, next slide. So this was the kitchen before. It was we did not go crazy. We wanted to keep this house in an affordable price point. We did also change the septic system. So we put in a new septic system for our buyers. So that was, 30 something $1,000 right there. And so that's the kitchen after. And so you can see this is a small kitchen. It's a very simple kitchen, not super expensive. It's a simple home, but we paid, I think, $185,000 for the house, sold it at $395,000, did a good amount of work because there was a lot wrong with the house and a septic system, but that still leaves us, I think we're going to make somewhere in the $50,000 to $65,000 range in profit on this one. It hasn't closed yet. So just want to show examples, even in this market, before this was sold, before interest rates started dropping, the right product can move and sells, and we've been flipping through it. So I just want to give a few examples of that. There's another one here, also sold before interest rates dropped. This one I just want to show 3 days on the market in Ottawa. And this was a hoarder house. Next picture. Yes. So that is the dining room. This was a hoarder house. That's Alan, on our construction manager, in the dining room. So this was a house. All we did to it was clean it out, junk it out, prime it, because it was in a perfect area. It was near Algonquin College, really great property to turn into a duplex or a triplex or rent it out to students. And we wanted to leave options available to the investor buyer who might want to buy it. So like I said, so that sold 3 days on the market. Basically, it looks like a whole different house, but most of that is actually just emptying it and priming the walls. So huge difference for a small amount. So I guess what I'm trying to say is I am optimistic on where the market is going. We've been flipping throughout all of these changes in the market. And I think if you find the right opportunities and you really nail in your construction process, there's opportunities all through any cycle. But now we're going to see it coming back even more, because I think, I'm not saying it's going to be a drastic quick change, but all the signs are pointing to gradual decrease in interest rates that might pick up if the economy starts faring worse. So a continued decrease in interest rates that then going to lead to people jumping in the market, realizing there's an opportunity to buy homes. It also becomes a bit of a snowball effect, sheep, if you want to say. As interest rates fall, people jump back in the market. There's less inventory. People see prices start climbing. Then there's FOMO. People want to jump in, and you're going to see more and more of that, as anyone who's been in the market more than a few years has seen. When a lot of people are buying, you see interest rate or prices continue climbing faster and faster and faster because people want to get in. So I know people have been saying this for a few years, but I think we're kind of at that inflection point. That first interest rate change was really vital. And with those things that I like to look at, I'm seeing it trending, and I believe it's going to continue, leading to more interest rate drops, which is going to stimulate home prices, because house prices are expensive and interest rates are such a key part of your cost on it. So I hope that was helpful. Like I said, not an economist, but this is how I view it. And this is what I look at for our business and how I see things changing. So if you have any questions about this, I'm going to pass it off. But if you have any questions about this, feel free to drop it in the Q&A instead of the chat, and we'll have an opportunity to answer some of these questions later.
Yep. Awesome. Thanks, Luke. So yeah, like Luke said, Alex, sorry, buddy, not to single you out there, but yeah, throw them in the Q&A, and we will try to get to as many as possible. So we're going to change gears just slightly a little bit. I know Luke gave you guys a lot of information. Luke joked around it that, he was boring some people to death, but I think if you were going to be in the investing community, you need to get comfortable with the boring stuff, right? You need to get in there to see where all of this is going. Talking about on the investment side and what Luke was saying earlier, we see it on our end. 2 years ago, things were chugging along great, and probably 2 months before, there started to be a change in the interest rates and that, we started hearing crickets from our investors who were, buying wholesale deals from us. So we kind of see it on our end, on the mass before anybody else does. And like I was saying, right, a couple months ago, all of a sudden we started getting a lot of phone calls about people to get jumping back in. So there's a lot of people that believe things are going in the right direction as far as the real estate investment side. So anyways, again, thanks for joining us. Anybody joining late, we're going to go through 3 presentations here. If you have any questions, drop it in the Q&A. I'm going to jump in here. So here's what I want to talk about. This is exciting for us. So if you are a flipper or on the real estate investing side, the things we love to hear, if you're serious, like when we get a call from somebody that says, oh, my house is a mess. Luke saw that hoarding house. There's so many people look at that and go, oh my, I'm just embarrassed to have you over. This is such a big problem. When you really dumb it down, all you're doing is emptying at a house. Like Luke said, I think that house, we emptied it out, right? We you know, a little bit of elbow grease, a little bit of soap, a little bit of paint, and that house dramatically different. But when somebody's looking at that house, they think, oh my God, where do I start? Right. So one of the things I want to talk about that we get excited about that not a lot of people do, but people who are serious in the flipping game get excited about that, which is a number of you guys have heard this, but the bigger the problem, the bigger the profit. So next slide, Meg. What I kind of want to talk about, we're going to go through a few of the homes, some of the problems I'm going to tell you guys about, some of the stuff we've come across. And for each one of these things, we've probably had, you know, 10 to 15 to 20 homes. If you missed at the start, our business, we've bought and sold over 1,000 homes the last 5 years, to give you an idea on our scale. So we've seen it all. When I'm going to share some profit numbers with you guys, I'm not showing it to brag to anybody. It's just to show you that, again, to go back to what our opening slide was, the bigger the problem, the bigger the profit, right? So what scares a lot of people is what gets us excited. So on the next slide, I'm going to talk about, so tell you a few stories. People like a little bit of stories. So this one, nice and easy. We had a mother and daughter lived in Alberta. The mother owned the home. The son was living in the home, refused to leave. They were not able to do any showings. The sister and the mother called us, said, hey, we need you to buy it privately. You've got to deal with the son. You've got to take him on. We called him up. He essentially, I'll give you guys the PG version. He essentially told us that he would burn down the house with him in it before giving it to us. And I think they talked to a number of people and, you know, realtors, whoever it was, they met the brother, realized, thought this guy was, you know, not the coldest beer in the fridge, didn't want to deal with him. And we said, hey, we're interested, right? I like the sounds of it. Let's see what we can do here. It sounds like we can make some money. Long and the short of it, we had a conversation with him. Most people have probably heard the cash for key scenario. Essentially, you give a tenant money to leave, which if you can get over the, I guess, the pride of, you know, somebody not paying you as a tenant and get over the fact that you actually have to pay the money after they didn't pay you, but the end outcome is what you're looking for. We end up paying this person $4,500 to leave. That's all it was. He decided $4,500 was better than to burn down the house with him in it. A little bit of work. I won't show you guys some of the houses, like all the work we did, and bore you with that. So again, I want to keep it to 90 minutes. But we made almost $74,000 in profit off this one. So what looked like a massive problem for somebody, we got it, right? So we took it and ran with it, and it was not, you know, there wasn't a lot of work put into it. So next slide, please, Meg. If you guys are wondering who Megan is on our team. She's the one flipping through our side. So I don't want any of us to sound like a crazy person just randomly throwing a name out there. So Meg is our office administrator, and she's helping us with this. So this one, if you haven't eaten, I am very, very sorry. Do not look at these pictures in detail. This was a house that we bought in Ottawa. They phoned us up. They owed 90-some thousand dollars in back taxes. The bank was going to take their house in a week. We said, we can solve your problem, right? They had realtors, a bunch of other people in there. Nobody wanted the house. We said, absolutely, we're excited. We'll take this thing on. The long and the short of it is, bought the home, never actually entered the house. We bought it essentially at land value because they would not let us in the house. We let them live there. If you go to the next slide, Meg. Here is essentially the time on it. We bought it, closed it in less than 10 days. The tenant stayed for about 55 days, which was 25 days longer than what we originally agreed. We did what's called a holdback. So if you ever buy a property and somebody is saying, you know, they want to lease back for 10 days, 20 days, 50 days, whatever you agree to with them, the very, very smart thing to do is what's called a holdback, which is essentially you agree to a very large sum of money that the lawyer will hold on to. And if the tenant or the owner does not leave, or previous owner, I should say, does not leave on the date of agreement, you get that large sum of money. So essentially, you're incentivizing that previous owner or whoever it is to leave the house. Otherwise, they will not get this lump sum of money, which part of that will probably go eventually to try to get them out of the home, whether, you know, it's a tenant, whether, you know, a number of you guys have probably been through that, trying to, you know, get a previous tenant or a tenant out or a previous owner. So anyways, so you guys saw the pictures, absolutely nasty when we got in the home. What we did was we hired some laborers from Kijiji and paid them $20 cash an hour, right? They came in, emptied out the house, filled up. I can't even, Luke, I don't know if you remember, Luke, but I think we were somewhere around 15 bins. They haven't had running water in 5 years. So their bathtub was essentially their toilet. And I will spare you guys some of the details. If I see you guys at an event, I'm happy to share more pictures, more video, tell you guys in detail all about it. But it took us 2 days. We cleaned out the house. We were going to flip it. We took a look at the house and said, hey, you could actually have 2 homes on this property, or you could build a 12-unit apartment building. We got it out on the market. We did not do a thing to it. We listed it as is. And we sold it within 3 days, and we made $157,000 in profit. So most people looked, oh my God, house is a disaster. Tenants need to stay. We looked at it and said, there's lots of money to be made here. So next slide. Water and mold issues. So if you look at if you're facing your computer on the far left picture, if you look on the ceiling, that is black mold. The other pictures are down in the basement, except for the one on the right-hand side. I was trying to get, sometimes pictures don't do this justice. It is like a film, it is mold. This home had, essentially, we had spoke to the previous owner. They called us about selling their home. We went in and it was in significantly better shape. We couldn't agree to a price. That seller met an unfortunate demise. Their niece took over the house. We followed up with her a little while later. In the meantime, over the winter, a pipe had burst in pipe had burst in the basement, and the neighbor called the town because the basement had filled up essentially like an indoor swimming pool, and water was pouring out of the windows. The niece took a look at this and said, I don't know what to do with this. I don't have the money to do anything with it. Are you guys still interested in buying it? We obviously said yes. We're still interested. Obviously, it's got to be at a reduced price because the house I was looking to buy, you know, last year is not the same house as this. Most people would have taken a look at this and ran for the hills because, you know, mold is nasty. Essentially, what we did was we paid a team of a construction team. They came in, they gutted the home. I think we were again around about 14 bins, I believe, like 20-yard bins. Full hazmat suits, part of it. Absolutely gutted the house right to the studs. We did a full renovation, which is not usually our bread and butter. We like to do a lot more on the cosmetics side. We generally don't get into a full scale, like full house renovation, but we did on this because it made sense. So if you go to the next slide, you can see the timeline. So essentially, basement flooded out the windows, black mold everywhere, full gut job. We did a full reno and we made $228,000 in profit. So again, I don't put the numbers up there to brag, team. It just goes to show you if you're willing to put a little bit of work in. There's people out there who I believe it's remediation. For some reason, that word sounds funny to me, but I believe it is to clean out. There's companies that are like disaster companies that will clean up stuff like that. And it's probably a little cheaper than what you think. Or again, you can always throw an ad out for somebody looking to come and just do a day's work and clean out some of these places, right? So Yeah, so that's our water mold house. So yeah, Alex, it is like being a house therapist. It is. We you know, when you're getting into doing flipping, you know, there's you do feel really good about this because yes, it's like a house is this person who has been treated very, very poorly. And you know, it's one of those shows where it's like you know, you take somebody who is less fortunate, you go, you get them a haircut, you get them new clothes, you know, you do a number of things for them. That's essentially what we do for a home. And that's, you know, you feel good about it. We're proud of what we do. It's fun along the way. And we make some money. So this next one, again, if you guys, I don't know how much you're leaning in or, you know, how much you can see that you're zoomed in. Toilets are always fun to take a look at the toilet, right? You know, a lot of time a toilet will tell you what, you know, level of cleanliness somebody has. All of that stuff right there is dog hair. So this was a home we bought. Luke, I don't know if you remember how many homes or how many dogs these people had. I think it was 5 or 6 large dogs living in this house.
I think the bigger issue is they just let them use the house as a toilet.
Yeah, that was yeah. So Alan, our wonderful project manager, he's got a very strong stomach. He's seen some things in his time working with us. And you know, you saw him on top of all of that garbage in the one house that Luke had showed. This Alan actually left the home to throw up. This is how bad this house was, right? But again, we didn't go, no, thank you. We went, yes, please. Can I have some more? So we took this on, and Alan was really, really, really excited about it. But we took the project on. So if you go to the next slide, this is essentially, I apologize for the 63.55. That didn't turn out so good here on the profit, but it's about 63,000. So barely walked through, went back, ran out, puked, hired inexpensive laborers, right? Plus we have our own team. We have our own team of wonderful people that are on Alan's team that are happy to do a number of jobs for us, right? I think they like the different, you never know what you're getting into in your day. It's very exciting. It's not the same thing. We renovated it and made very good money. And again, most people would run from this house, but we were like, yep, very, very excited. Next slide, Ming. So construction. So last but not least, if I remember my own presentation properly, this was a house we had bought a few years ago. And it's always a fun one to go back to because of what we did. So part of it, I don't necessarily recommend to anybody. We were a little bit more naive a few years ago. However, if you can see the picture on the left-hand side, that's actually their driveway. That is the left-hand side is the driveway with a giant hole. It had caved in into the middle. Yep, there we are. We have a nice arrow here pointing at where all the blue tarp has fallen in. The picture in the middle is the inside of the home. So the seller was still living there, phoned us and said essentially like, my house is not safe. We do need to sell. Would you guys be interested in it? We came in and, you know, we jacked up the house. And this is the part I say I wouldn't necessarily recommend. We did all this while the seller lived in it. So we kind of went with the whole, hey, we'll fix your house, get it early so it's safe for you to live in until we close on it. It would have been a lot of problems if they'd have said, you know what, now that you fixed my house, I don't want to leave. Thank you for fixing my house. You'll have to take me to court. However, the seller held up their end of the bargain and moved out. We finished up a bunch of work. We went in, we did very little of the house. Again, it was an older home. It just needed some love. We cleaned it out. We put it out onto the market. I apologize. I should have put a picture in here of what it looked like after what we did. I believe the whole thing cost us around 15 grand at the time, I believe, Luke. I think it was somewhere in that neighborhood, maybe 15 or 16 grand.
Yeah, it was about 20, I think, just
did
for
it end
the
up being
foundation
20?
repair.
Yeah. Okay. Perfect. So go to the next slide. So I apologize here, team. You can't see this, the white lettering here. But way over here, yep, point to that. If you can see it over there, we made about $68,000 in profit on that. So again, would look like a big problem, really wasn't that big a problem for us. We've done it a number of times. There's lots of people out there that you can hire, and you can make a lot of money solving a lot of people's issues and doing the things that people don't want to do, right? The cosmetic stuff is very, very fun. In one of our markets, 95% of what we wholesale is the fun cosmetic stuff. 5% of what we sell is the problem. We end up, what ends up happening for us is on the wholesale side, we always have a threshold where if the wholesale price goes below this, we'll just do it ourselves. Because, generally when we send a property out, there is, even after our assignment fee, there is still quite a lot of equity in it. So if you're an investor and you're buying on MLS, you got to be real good at that. I would suggest, whether it's from us or somebody else, if you're looking to get into your flipping, make sure you're buying something off market, because you're already starting with equity in the home. And for those, when we send something out or somebody else sends something out, and you see something that looks awful, chances are run your numbers, because you're going to be competing against very, very few people when you're looking at an offer situation when it's a bigger project. Everybody likes to do the lipstick rentals, but the real money's in fixing the problems, right? So yeah. So anyways, Meg, next slide, and I'll let you get over to Darren. So thanks for your time. What we will do again, we will get to the Q&A after, and I know sometimes it's nice if we just answer the questions right there. We just want to make sure we keep a flow going. That way, if nobody wants to stick on afterwards for questions, they don't have to stick around, but to walk through this, right? So without further ado, team, we did a very poor job of introducing ourselves at the very start, which I apologize for. So if you don't know, guys, Luke Boiron is obviously the owner of our company. He is the brains of our real estate on our real estate side. He's the one who looks at all of the properties. And if you don't know Luke, I make the joke, during the day, Luke looks at real estate. At night, during his downtime over dinner, Luke looks at real estate. And then before he goes to bed, most of us watch stupid memes and videos and giggle till 12:30 and look at the alarm clock and go, holy shit, I gotta get to bed. I gotta stop looking at this stupid stuff, right? So
in case you didn't see that, I have a house tattooed on me.
Yep. And that's real, guys. That's not Luke didn't get that out of Hubba Bubba or whatever. No, whatever used to be the old tattoos back in the day, right? That's real. He did it himself. It's pretty good. So so then Luke looks at that. My point is, Luke looks at real estate nonstop, right? So anyways, so in second place in our company looking at real estate would be Mr. Darren Moore here. So Darren joined our team. Darren buys homes for us out in the BC area, is from Ontario, and buys a number of properties for himself remotely on the personal side. So Darren's going to walk you guys through here what he does, some tips, and I'm not going to give the rest of your presentation away, Darren. So have at her.
I love the Hubba Bubba reference, Corey. You are one of a kind.
Thanks, Darren. You're the best.
All right. Hi, everyone. Yep. I'm going to be talking today about buying properties virtually. Because I'll spoil it now, I guess. I own rentals. I own 10 rentals in Saskatchewan, in a town that I have never been to in my life. So I'm going to talk a little bit about that. And
is that because you're not allowed, Darren, or you just make the choice to not go there?
Well, the thing is in the winter, it's so brutal in Saskatchewan. I never want to go there. And then in the summertime, it's nice, but I live in British Columbia, so it's very nice in the summertime. So I also don't want to go there in the summer. So I just never go there.
So for anybody in Saskatchewan, we apologize. So yes, however, invest right there. And so
yes. Anyway, Megan, you can go to the next slide. So our company, so I'm not talking about my personal real estate right now. The company, we all work for here presenting. We buy properties through our home buying divisions. In the GTA, it's called Cash House Buyer. It's Ottawa House Buyer, BC House Buyer, and Montreal House Buyer. And we buy properties in highly populated urban areas, in cities, but also in smaller towns and rural areas. And then what my experience has been is that most of our buyers, though, live in highly populated urban areas, and don't always want to invest in smaller towns or rural areas because they don't want to drive to go there. They just say, well, I've never heard of that town, so I'm not going to invest in it. But there's a lot of opportunity in investing in areas where you don't live. Next slide, please, Megan. Okay, so back to my own personal portfolio of properties and what I do. So in the town in Saskatchewan where I invest in real estate, there are no wholesalers. So I can't buy properties off market. I have to actually find properties on the MLS. So I go on the MLS and I just look at properties. I just sort by newest and I find what's there that meets the criteria that I'm looking for. And then here's one of the most important thing is what's often called your boots on the ground. I have a property manager who I've had a relationship with for over 10 years, who is also a realtor. And he actually has a brother who is a contractor. So they kind of represent my team on the ground. I call him when I find a property on the MLS that I like, and I discuss the property with him. And I say, what do you think about this one as a potential? So if he sometimes he tells me, oh, that's in a poor neighborhood, you shouldn't buy that one, or actually that one has way too many issues, or what have you. But if he says that this is one that we should check out, he books an appointment to view the property, and he just lets me know what time he's going to be viewing the property. We try to get our time zones aligned, and then all of a sudden my phone starts going off with FaceTime during that appointment time, and there he is at the property. I start recording my screen so I can record the entire walkthrough that he does, and then he just walks through the property, with me on FaceTime, and it's just going, okay, Darren, this looks this, and he's commenting throughout the whole thing. And I actually get out either on my computer or on a notepad, and I write notes about what kind of work that he sees is needed and what are the good elements and the bad elements of the property. I do the screen recording, so I buy these properties with my wife on title as well. So I've got to then sell her on the idea. So I show her the screen recording and put my salesman hat on. And then I decide, usually my realtor goes back to his car when it's all done, and we sit there and we do some math and decide to make an offer or not on the property. And I don't have further bullet points on it, but we send in a home inspector. I negotiate it all through my realtor, and I buy the properties. And then we either take on an existing tenant or we buy the property vacant and then do whatever work is needed. And then he goes ahead and advertises the property for rent, interviews the tenant and so on, and then just lets me know how it goes along the way. He, of course, does all of this because he's compensated, right? He's a realtor. He makes money on the sale. He's my property manager. He makes a percentage on the monthly rent. He gets a finder's fee. So he's well compensated for this. And this is the key, is that if you want to buy properties virtually, that you have to have really good boots on the ground. You have to have a contact in that town that you trust and that knows what they're doing. But the thing is that there's realtors in almost every town in Canada. So we should be using them because they'll go out there and see these properties for us, and they want to make money too, right? So that's how I do it. I actually do plan to visit the town sometime this summer, just because I'm thinking of adding some bedrooms to some unfinished basements in some of these properties, and I really wanted to have a look at them myself, so we can figure out if we can fit 1 bedroom, 2 bedroom, and if there's any risks or anything like that. But Megan, you can go to the next slide here. So we often buy properties that are outside of urban areas. We at our company here at Bliss, and we often do sell those properties to investors, to buyers like yourself. And what I'm here to kind of let you know is that you can buy them virtually with us. So what you kind of do step by step is you'd receive an email with the property details about the off-market property that we've acquired. And then you would either contact Tammy if it's in British Columbia, or Katarina if the property is in Ontario, to discuss the property. You can ask questions about it, all kinds of things. And in the email will be property details. There'll be there's always photos and often video, like a video walkthrough as well of the property. So you can get a good sense of what it's like through the media there. You can decide to make an offer based on the media alone. Sometimes these walkthrough videos are so good that you really get a good sense of the whole place. Or you can book an appointment with Tammy or Katarina for yourself or for a representative to view the property. And you might say, well, Darren, I don't have any contacts in these towns that you're sending me properties in. But if you have Google, you can just search for the town name, realtor, and then call 2 or 3 realtors and see if there's one that works with investors, or maybe someone on their team works with investors. And you can start a relationship with them. Just let them know that you're a real estate investor and that you do plan to buy properties. And maybe they're also a property manager if you're looking on taking on the property as a rental. That's when you kind of start your relationship with your boots on the ground. And so then either you can decide yourself to travel to the property, depending on the distance and your appetite for that, or you send your local representative to the property. It could be a realtor or contractor. Maybe they'll bring a contractor with them. So then after the property is viewed, you can decide whether you think it's a good idea to make an offer on the property. And then you call Tammy or Katarina to discuss the property and to make an offer. You might say, Darren, like, why would I do this? Why would I invest in a town maybe that I've not heard of, or that I'm not that familiar with, when I could just invest in real estate locally where I live, where there's hundreds of thousands of people living, and I know it's an active market? Like, I'm just not going to take a risk like that. Well, the next slide will kind of tell you some of the reasons why you might want to try this. So go ahead, Megan, with the next one. So when we, as buyers, and that's what I do for the companies, I'm the person who goes to properties and sees them in BC, and I buy properties off market. We seek greater discounts when the property is outside of an urban area. And we often get good discounts because the homeowners know that they're not living in a metropolitan area, and that if they're selling their home to an investor, they'll likely have to sell it for a lower price than if their home was in Vancouver or Toronto or one of these urban areas. We just get better deals out in these areas. So you'll just buy the property for a better discount. You'll have more equity as a percentage of the property if you buy a property that's a little further flung. And then what we're seeing in BC is that we have a lot of competition for properties that are in the Vancouver Lower Mainland area. When we put out a property in Surrey or Langley around here, there are just so many people who want to see the property. We get 20 to 30 requests to see the property, and we only really do one walkthrough. So then we have to, we have to figure out who's the most serious buyers amongst them to decide who's coming to the property. And then only one person can buy the property in the end. So then that leaves, 19 or 29 people who wanted to see the property and wanted to buy it, and who are upset with us because their offer didn't win. They weren't the winning bid. But if you buy a property further flung, there'll be far less competition. You might be competing against just a small handful of people, or you might even be the only person, or maybe just 1 or 2 of you looking to buy the property. And then that means that you have a much higher chance of actually getting the property. And then my next point is that your assignment fee, which, just the basics, we buy the property for a price, and then we of course have an assignment fee that you'd have to pay to us for us to assign the contract to you. The assignment fees are just much lower for properties that are out in rural or further flung areas because there's less competition. We're not looking to get rich with these assignment fees, but we're just looking to hit singles and not home runs when it comes to properties out in further flung markets. And then overall, just the purchase prices, of course, will be lower for properties in smaller towns than in bigger cities. So maybe that makes your financing easier. Your deposit, your down payments rather will go further. Maybe there's less risk because you see some of these markets have big swings up and down depending on how the market's going. But in a smaller town, I imagine the fluctuation in real estate prices and valuation is lower. So then you have much less risk in terms of buying a property and then somehow having the value of it drop because of an interest rate increase or something like that. And then this is why the last point, this is why I invest in small town in Saskatchewan, is because the property can cash flow. I can buy properties for the same price as you would buy a pickup truck for. I can buy a detached 2 or 3 bedroom house. So then you can imagine that if you're renting out something that you paid $70,000 for, you're renting it out for $1,200 or $1,300 a month, you're probably going to be doing pretty well in terms of cash flow, that you're going to be cash flow positive. And we know it's harder and harder to find cash flow positive properties across Canada. I even see ads come across my social feed that say, you know, you should be investing in Ohio or something like that for cash flow. You don't need to go to the States to necessarily to invest in cash flow. You just have to look at more up and coming cities in Ontario or wherever else you live, and then invest in those. And it makes sense because, you know, there's markets that are expensive now, like London, Ontario is expensive, but 10 years ago it wasn't, right? 10 years ago you could buy a detached house for $200,000 or less in the city.
Hamilton's in the same boat, right? Hamilton.
Oh yeah, Hamilton's super expensive.
Right? And then now it's come down, and then we've recently, you know, assigned some stuff in Hamilton, right? Because people got crazy and then got level-headed, right? So yeah.
Yeah. So what I did is I said, okay, well, if I can, you know, you hear about people these days, you hear about these folks who are seniors and they bought their home for, you know, $70,000, $80,000, and now it's worth $1 million. And I don't necessarily think the properties I own in Saskatchewan will be hitting $1 million, but I think buying low is a great idea. And you definitely can do that when you're further flung, buying properties outside of urban areas. So that's really it for my presentation. Yeah, I just encourage you to kind of just expand your mind. And we live in a beautiful country. Even if you want to go and see these properties, you probably have a really great time doing it.
Good excuse.
Yeah, exactly.
Since expensive here. But yeah, I don't know.
All right.
Yeah, awesome. Thanks, buddy. Awesome team. I think Luke's having a little bit of technical difficulties here. There he is. There he is. So let's run through some of the questions here, Tim. We got a little bit left. So I'll try to get you guys out of here at 9:15. We've run through some of these. Some of the couple of the questions are pretty easy to answer. I'll try to get it over, or, you know, Darren or Luke, I'll let you guys answer any of these if you think, you know, you might be able to. Luke, start with this one, because this was kind of tailored at the start of yours, which is, how is the interest rate correlated with Canadian mortgage bonds?
Yeah, they're almost, oh, camera's having issues. They're almost directly correlated. They're not 1 for 1, but they move in the same direction. They just don't move at the same rate at the same time. So the 5-year bond rate moves constantly, right? It trades throughout the day, whereas the fixed rate is then based off of that. It's not the same number, but it moves the same amount. So if you see a drop over an extended period of time, over several weeks, on the bond rate trading in the market, you're going to see a drop in that direction, by about the same amount over a few weeks, over a month, in fixed mortgage rates. So they move together, but not. It's more like one's trading in the market and one is, okay, now the banks now need to lower it when they decide they want to. And you will actually see smaller lenders lower more, like they'll follow it quicker, whereas the bigger banks take their time as rates fall. But they do like to climb quickly when rates go up. So it's not like they're not paying attention. It's just that they want more certainty. They want more of a margin before they go and drop their rates.
Excellent. Awesome. I just saw here in the chat, Kaval, congrats, buddy. Yeah, he bought a property off us in Orillia and renovated it and flipped it in 75 days. So I was actually there for that at the house, and yeah, awesome, buddy. Adam's asking, when do you think the fixed rates will drop? 6 months?
I mean, well, they already are dropping. As I was looking at, let me drop this in the answer, but just something on Rate Hub. If you look, you know, at a fixed rate chart. So for example, the discounted 5-year fixed rate on October 1st, 2023 was 5.49%, and May 1st was 4.79, right? So that's at a 0.70 basis points drop from October to now, because bond rates have dropped, as I was saying, the 5-year bond rate. So it will follow. They just take a little bit longer. So, they had started climbing when it went up to 3.8 recently, the 5-year bond rate, and you're going to see them start falling as well. Let me just drop this in to type the answer here. But yeah, they've already started. They have been falling they have been going up and falling. That's how it works. And if you're asking kind of long term when they're going to fall, I mean, they're going to keep falling as the variable rates fall, as the Bank of Canada decreases their interest rates. If you're asking in the shorter term, in the next few weeks, you're going to start seeing it fall, but it's not like it's going to be a 2% change overnight. It's 10, 20 basis points at a time that you'll see the difference.
Nice. Prav's asking, private lenders still lending for properties in rural, remote areas.
I mean, it's always harder to get private lenders in rural areas, but some have certain rules. Like if you're on our buyers list, you'll see Calvert Home Mortgage is one we work with closely. They fund a lot of our properties. They have certain population requirements. So X kilometers from a city that has, I don't know, 25,000 people or 50,000 people, something like that. And outside of that, they don't typically lend. But different private lenders have different rules. And a lot of private lenders lend through brokers. So I would just find a mortgage broker that's familiar with the area, because they may have private individuals who are comfortable enough with the valuation. You will probably end up possibly paying a little bit more in interest and possibly getting a little bit lower loan to value. So as long as you're not trying to finance the hilt, you can always find private lenders to lend in rural areas.
Awesome. Alex has got a few questions in here. I'll kind of pick a few of these off as we go. Alex is asking, do we typically sell on the MLS after rehab cleanup? Absolutely.
Yes.
Again,
and so because to be clear, on the wholesaling side, we're selling this before we own it. So we never have to take possession, which means we don't have, one of the reasons we choose to assign properties is that we don't have, any land transfer tax, like most of the legal fees. We don't have to finance the property, et cetera. We're selling it as an assignment. We're selling our contract, and then the buyer is closing on it. And then that's why we buy it at a discount, but we're still selling it at a discount because we don't have all these costs to close on it. Once we've taken on those costs, we've closed it, we've financed it, we've paid the LTT and the legal costs. That's when we then are also going to pay the realtor commissions, sell it on the MLS, because that exposes it to the largest demographic and the end buyers, because our buyers list is for investors typically. And they're not going to pay for this beautiful flipped house that's beautifully staged. There's no reason to. Why would you pay top dollar for that? So we sell those on the MLS for top dollar.
Alex asked, do we have any ballpark cap rate of return for the rentals in like small towns and areas?
So I just did a cap rate calculator online. So one of my better performing properties last year was a 7 cap, which is good in my opinion. But it just depends on what you buy it for, what work it needs, all that kind of thing. But I think that's a lot better than you could get in the GTA or the urban area. Yeah, it's just the only thing is that you got to buy a lot of properties. You're not going to get rich by buying one house and making $250 a month off of it in cash flow.
Absolutely.
And I will point out the difference too. Darren's talking about actual numbers on his properties, like actually getting a 7 cap. A lot of times you'll see, sometimes when you see, oh, this has a high cap rate, well, you're looking at, sometimes what you're looking at is really rough properties with a lot of problems, problem tenants, problem areas, etc. And you have to be careful of those because the cap rate's often theoretical. You're like, oh, I get, this is a 9 cap, amazing. Well, it's a 9 cap in theory. Like, yes, it's supposed to collect $10,000 a month in rent, but then you go to collect and you have squatters and people not paying and all these issues, and you're actually collecting, $6,000 a month in rent instead of 10. And then you still have the same expenses. So quickly your cap rate drops from, a 9-10 cap to a 3 cap. And you're thinking you're getting a deal dealing with all these problems, and you're not. So it's paying attention to not the theoretical cap rate, but taking into account all the potential expenses. So Darren's talking about actual, his actual real numbers that he's getting on his properties. And it's not theory.
Mm-hmm. Absolutely. Prav asks, what's formally used to determine max purchase price? He's got purchase price equals ARV times 70% minus rehab cost. I'll kind of let you answer that, Luke. I would say just real quickly, anytime we're ever buying, guys, we focus a lot. Obviously, we're going to look at ARV, but sometimes ARV can be very subjective based on what you plan on doing to the home. Luke, I, and Darren could look at a home and we would have 3 different ideas on what we're going to do. Our general rule is never be the nicest house on the block because there's no comparables. It's a small rule. For us, it's, hey, are you getting the, because we buy off market. So, are you starting with equity in your home? And then just trying to figure out what you would do with it, right? I don't think we have a certain percentage. There's a little bit of gut feel. There's a little bit of, hey, I know we can make some money on this, but Luke, you can probably jump in a little bit more because I know you analyze the deals a lot more than I do.
Yeah, that formula is something you typically see when people are starting to wholesale it. Just to recommend it as a quick and dirty thing. I wouldn't close the purchase of a property on that. If you want to make a rough, a rough estimate over the phone when you're not sure, you can throw out something like that. What we do, it's actually very simple. We just look at what the expenses are on a property. We put it together into an Excel spreadsheet. I did this a very long time ago. Probably created this in like 2017 and haven't really revised it since. But it's basically a very simple Excel spreadsheet that calculates, if you put, 20% down, this amount in fees, this amount in legal costs, this interest rate, this percentage is going to cost it as an insurance. It estimates, for a cosmetic reno, how long you're going to carry it, all of that. It sounds complicated. It really isn't. You just put all your typical line items to own a property in a flip, closing costs, legal costs, financing, etc. And you generally know what those are. So obviously, if you understand your own formulas, you can revise it in a weird situation. But for 95% of our properties, we basically have to change three cells, which is purchase price, sale price, and reno. And then it tells us what the profit dollars and percentage of purchase price would be. That very simple spreadsheet that we put together just runs all the numbers. So your formula, purchase price is ARV times 70 minus reno repairs. That's a quick and dirty kind of thing. And also the 70%, it's not going to work the same if you're buying a really cheap $100,000 property or a $2 million property. It's kind of different. The percentage doesn't work the same way. So it can be a good quick and dirty, but it's not that complicated to just calculate out approximate expenses. You know how much it costs you to close a purchase with a lawyer, sell a property with a lawyer. You know what your legal costs are going to be. You can estimate what your private mortgage rates are going to be. Talk to a private lender, or if you do this, through yourself. You've seen it before. You're paying this much for the lender's lawyer, this much in a fee, this much in interest, and then you calculate, this is going to take me 4 months or 6 months, so you can calculate the amount of the interest, and then you have your total financing cost. You can put all of those numbers into an easy Excel spreadsheet, and it'll spit out. It can kind of spit out an answer for you. So sorry for the long answer on that, but yeah. And I also wanted to add, Jared Henderson, very smart guy, threw out a good comment in the chat. He said about finding private lenders in rural areas. He said for rural areas, local lawyers and local mortgage brokers are good sources of private loans. The local lawyers is a great idea. They know who they're writing these local loans for, right? They know who the people are that they're registering private mortgage for. So someone local in the area who's giving private mortgages, that lawyer is going to know them. And then that person is comfortable because they know property values in the area. They're already funding properties in the area. To them, that's not rural, that's home. And at that point, they have no problem financing it. So great idea, Jared.
Absolutely. This is a pretty easy one here, guys, from Alex. And again, Alex, I appreciate you throwing lots of questions in there. Can you get positive cash flow from rentals bought off the MLS? He says in large cities, it's next to impossible from my research. The quick answer is it's difficult. It's very, very difficult. Our rule with MLS, generally, especially in big, highly populated areas, is if you think it's a good deal and nobody else does, it might not be, unless you're really, really experienced. It's kind of, however, we have bought stuff off the MLS, but we rarely do it. So I don't know if you want to add anything in there, Luke, but I would just say stick to, if you're going to be buying rentals, try to buy them off market, whether it's from us or somebody else or on your own. That's the way you do it. You're already starting with equity, right? So yeah.
Yeah, I think most of the stuff that you can find deals that work on the MLS, but it's very hard to buy straight off the bat off the MLS, especially in a big city as is. It's usually where we talk about this often, but there has to be, you have to have some sort of advantage. And I think everyone has a superpower. Ours happens to be buying good deals. Someone else, it might be renovating for a lot less money than it would cost me to renovate. For someone else, it's, they're not paying expensive financing on a private mortgage instead of paying, 2.5% fee plus the lender's fees plus, 10, 11, 12% interest. They're paying, well, they're using cash or a line of credit on their primary or something like that. And it's costing them way less money. So everyone has to find the way that what their advantages are and use that accordingly. So, for example, you can buy off the MLS a property that you could convert into 3 units for if you're in Ontario, for example. You're basically allowed across Ontario in the cities to convert almost anything to 3 units now. Some cities are allowing 4 basically as of right. Again, certain rules, parking and things like that. But you can use existing space. But if you're able to keep renovation costs down, for example, if you're able to manage that closely and do a good job of that, that might be kind of a superpower for you. You can buy that off the MLS, keep the control of the renovation costs very tightly, and then still make that cash flow when you're done. I just think it's very hard to buy in a city, in a decent sized city right now off the bat on the MLS and cash flow.
Awesome. Would there be any additional realtor fees that the buyer has to pay to get a realtor to look at it? Generally, no. To Darren's point there, let them know that you're an investor, you're looking to invest in their area. They want your business. I wouldn't suggest sending them on, 20 properties without making an offer. That's, they're not going to be very nice with you, right, Darren? So you kind of want to make sure if you're going to do it, look at your pictures, kind of get a real good idea for it and send somebody along, right? Or let them know that you're looking in an area and if they want to run some properties by you as well. But generally there isn't any fees. So yeah.
Yeah, what we've done is that on properties that us as a company have bought remotely and wanted to renovate and flip, we've just said to the realtor, hey, can you take a look at this? And if we buy it off market, we promise to sell it with you when we're done the rehab. So there's the realtor's opportunity there. So that's what they do. And then if you're looking to buy property as a rental, if your realtor is also a property manager, then they can be your property manager or refer you to one and get some kind of referral fee. So there's all kinds of ways for them to make money, and a smart realtor will see the opportunity there, and yeah, they'll figure out a way to make it work for themselves.
Well, and if you're buying off the MLS, of course, they're getting paid as buyer agents from the seller. In another situation, it might. I'm not saying they should get paid anywhere. You should, if there's not otherwise commission from the seller, that you should be paying them anywhere near what the commission is. But like Darren said, hey, I'll sell it through you at some point. And if I'm buying more, you'd be my person to buy in there. But it might be worth paying them something anyways, offering to pay them something, just to show that you're not just trying to get them to work for free as well. Assuming you buy this, then you'd pay, a set amount rather than X amount as a percentage.
Awesome. Adam asked, can you please share any other situations where you've used a holdback in your contracts with the sellers? I'll kind of blanket that a little bit, Adam. We do it anytime the seller wants to, say, close on a property and live there for 10 days, 20 days, 30 days. We always negotiate kind of, and unless we get a screaming deal, we always negotiate some sort of rental rate, and then we figure out what the price of the home is. Something that's reasonable, but would also be painful if the seller they were supposed to move out in 26 days and they got to day 28 and they weren't out. Something that really incentivizes them to move out. So off the top of my head, we've used it a number of times. So off the top of my head, I don't have a specific property. But if that's ever the case, if you're ever buying from us on a wholesale deal, we've already negotiated something that makes sense for both sides in that for you. So generally you don't have to do it. The only time that you would have to do it through us is if after you're purchasing, they're asking you to do that. But that, again, that would still be your choice, whether you wanted to look at something like that. So, I mean, if you ever have it with one of our properties, feel free to ask Katarina or Tammy what the holdback is. If that's a situation, we'll tell you that the seller wants to stay for a specific amount of days after closing. So yeah. Alex asked, do we run into high vacancy rates in rural areas?
Sometimes, and sometimes not. You know, it's funny in some rural areas, there's like a huge demand for decent housing. And in some areas, there's a ton of vacancy. So I don't know that it's necessarily a rural versus urban thing. I mean, I'm sure there's a correlation where rural would have more, but there's lots of small towns where they haven't built housing for a really long time. Especially during COVID, a lot of people moved to smaller towns. Some have moved back out, but I think there was an increase in people to move to smaller towns, and there's just not enough housing in a lot of these. So sometimes when you compare purchase prices to rent amounts, it's surprising. You know, the rents are not that much lower than being in the city in these rural areas, but the purchase prices can sometimes be a lot lower. So that's where a lot of the value is attained there, really.
Awesome. So we've got two questions left. I'll leave Alex's question till the end. But Kaval, he asked, any city rural areas which our company avoids? The answer is no. Our general rule is, you know, if it makes sense for us, we are interested, right? If the price makes sense. I don't think we have any cities that we avoid, do we, Luke? Like we don't have a blacklist of cities. I mean, there's
not a blacklist, but it's about adjusting our price compared to like how much of a discount we need. So if I take, let's say a condo unit in a building where, let's say there's, I don't know, 100 units that are the exact same and several sell a month, it's very easy for me to compare what they're worth, right? Especially newer build, they're all the same. It's very, very easy to compare them. The only difference might be like floor height. But then you might take a rural old farmhouse built in the 1800s in a rural area. It's very run down, and there's nothing like it around. That makes it much, much harder to run comparables on. Makes it much more difficult to ascertain what renovation costs might be. So at that point, the risk is higher. So if I want to close on that, I'm looking for a bigger discount and a bigger margin. I want a higher profit margin as a percentage, well, in dollar value, to take on more risk. So cookie cutter townhouse, cookie cutter condo, a cookie cutter house, right? In a popular area, you know, I can squeeze my margin because I have more confidence in the end result, and my risk is lower. Taking on a more rural area, I mean, that's a bit what we were talking about, you know, risk and reward. You shouldn't be taking more risk for the same reward. You're looking for risk-adjusted returns. So what you should be looking at is, oh, I'm going further, I'm buying remotely, or I'm taking on a bigger problem. I should expect to make more money. It's both a reward for taking on the risk if it works out, and it gives me a buffer in case I find issues I wasn't expecting, or I was a little wrong on the comparables. It gives me more of a margin for error. So, you know, hopefully worst case scenario or bad case scenario, I'm making as much as I would have on the other one. What good case scenario, I'm making way more to make up for the risk that I took. So there's nowhere we avoid. And another thing I look at too is I look at I look at the number of listings versus sales in an area. So I might, you know, I'm basically looking at absorption rate for active units in the area, and that tells me how hard it's going to be to sell my property. And sometimes I'll see an area where it's like, wow, there's 10 or 15 or 20 months of inventory. You'd be surprised. Near big cities, you often can see this too, at certain times. And what I do there is I'll buy that, no problem. I'm not planning on waiting 10, 15 months to sell my property. What I'm planning on doing is selling mine for less so that I'm the best deal on the market, and I'm still going to sell in a month. But now I'm looking at my after repair value, my ARV, and I'm discounting that by what I think I'll need to be one of the ones that sells the fastest in that area. Long drawn out question, but no, there's nowhere we avoid. We just adjust our price. I've always said I'll buy anything, anywhere.
Awesome.
One thing I look at
Yeah.
is how far away is the closest real estate office to this small town? If it's like an hour and a half or more away, like gosh, then it could be a slow market because no real estate company has decided to put an office in this town, right? And then you can just think of the logistics of having a realtor drive an hour and a half or more to see the property every single time. So I don't avoid buying properties in those situations, but I definitely have to discount them further because of the reasons Luke said.
Yeah, and that's an extreme rural version. I deal with less of that in Ontario. With Darren, you're talking about, you know, the British Columbia area, like you have very populated around, you know, Metro Vancouver. But then when you leave kind of that area and Kamloops and those areas, you go further north, there's some very remote areas.
We had
we
that
don't-
one, Darren, wasn't it 17 hours north of you?
Yeah, that was in Kitimat. But there's actually a lot of islands around Vancouver Island that are sparsely populated, and people call us all the time to sell their properties. And they've got some realtor coming in on a ferry like once a week, doing all the real estate for the whole island. Like it's like, oh my goodness, this is a logistical difficulty, right? So if I
So you
if we
better
ever
make
bring
more
a
money.
property-
You better make more money if you're going to do that deal, right? You need to get a
Yeah.
much better deal to make it worthwhile.
That's right.
There's always a price.
CR in the chat. You asked a couple of long questions. What I would tell you there to answer all of this properly, because we've only got a couple minutes left, I would say make sure you're on our wholesale list on off market lists. And we have a video at the bottom of it that you can go through and watch that video. That'll answer a lot of your questions that you have there. We could spend another little while talking about quite a bit of this. But the long and the short of it is your traditional banks generally don't lend on the assignment fee. So
Some private lenders will. That's actually one of the reasons we work with Calvert Mortgages. And they're in our emails as well, because they will like in Ontario, they will finance the assignment fee as well. So
they're always confident in our deals are deals, right?
But if you're going anywhere else, expect to you need to have a cash buffer to cover the assignment fee for sure.
Yep, absolutely. Last question here. Alex is asking, do we do wholesale coaching or any other REI coaching? We have, to be blunt, we have absolutely zero interest in coaching new competition. However, Luke and I have had some conversations around bringing some other new wholesalers into the fold to help them with deals, help work deals, and find a way for us to mutually benefit. But Alex, the long and the short of it, if you're looking to run your own business and all that, we have zero interest in creating more competition for ourselves, right? The any other real estate investing coaching, we've got some stuff in the works. We are chatting.
I would say a friend of mine who I very much respect his knowledge and experience, Christian Spitzvogel. He just started, I think today was the first official day it was open, a company called Aliferous Academy, aliferousacademy.com, ALIFEROUS academy.com. So he's offering coaching with several other respected real estate investing coaches or real estate investors in Ontario. And yeah, so him, Elizabeth Kelly is a well-respected coach. If you're looking for general real estate investing education and coaching, there's some good people out there in Ontario to go see.
Awesome. Fantastic. Ladies and gentlemen, it has gotten to 9:28. I told you I'd get you guys out of here in 90 minutes. I hope you learned a few things. I hope we gave you something to think about, different ways of looking at it, different ideas on what you're looking to buy potentially. If you have any questions, you see anything, again, contact Katarina and Tammy when our properties come out. They'd love to chat with you. We will be doing an in-person meetup probably heading towards September, October. I think we haven't really set a date yet, but we do them down at, we do some webinars and we do in-person stuff. We always try to do it when we think we can bring you guys some content, not just, hey, look, it's the third Tuesday of every month. Let's just get everybody together and throw some stuff together. So we will see everybody at Black Lab probably somewhere September, October. Everybody have a great summer, buy some properties. We think now is the time to get buying on the investment side. So thank you guys very much. Everybody have a wonderful night. If you're in Toronto, try to avoid the lightning. There's been a lot of lightning going on here while they're not just on this, but outside as well. All right, everybody.
Have a good night, everyone.